Hello everyone, I am Dr. Eric Morrison. This is 7 Under 3, and I'll be covering trading education, more specifically Forex trading, using the TC2000 and TradingView platforms. Hello, this is the Futures Week in Review for the last week in June, from the 26th of June to the 30th. I'm going to start off with the dollar. And now what we currently have is an FTM to the short side. We are crowded out long on this, so this is significant in terms of overall FTM on the daily to the downside, which means that this could force pressure not only for the Forex and stock market, but for the futures as well. And looking at treasuries, currently had an FTM to the downside, and a little bit of retracement right off major support level at 96 here. We do have a target of 94.66 to the downside here, and this would pretty much align it starting off with the low that was set forth back on the 2nd of June. Now we start off with gold. Gold, we now have an upward bar with FTM to the upside. It's still crowded out to the short, or crowded out long, which indicates a short. If you did have an initial short here from this location, you might want to consider, or this location, you might want to consider closing it out and waiting for another entry on the FTM to go to the short side. NASDAQ is on an upward momentum, doing very well. It's mixed on its commitment of traders. However, what we do have here is a standard trend trading approach and a nice J-hook formation happening here. Everything is green to the upside, and it could move this duration after this particular high at 15,297 in this leg here to the upside. So very bullish for NASDAQ, and we have an upward target of 15,901.6. Natural gas, no significant commitment of traders. Here we have retail and institutional non-alignment. So standard trend trading applied. Everything in the green, upward momentum. No FTM indicator to signify, but there is a J-hook formation happening here with, again, another leg here of potential profit to the upside. We do have a downward target of 235, so this could be a precursor to a downward movement. We'll see. S&P 500, again, along with the NASDAQ, has this nice J-hook formation happening here, a nice overall leg. And we are crowded out to the short side, which is interesting here in terms of this potential bull run could go this potential leg. We do have a profit target of 4619.5 to the upside. So this is significant positioning for a nice bull run to the upside. Russell 2000, also mixed on the commitment of traders. We have a nice target of 1987.48 to the upside. This also has this kind of catapult formation forming here, and if it continues up, we got a nice leg to the upside. Dow also is showing significant strength. There's a lot of commitment of traders on the institutional retail to the short side, so there may be an additional squeeze going once it gets past this overall high of 34,558. We do have a profit target on the Dow for 35,321.6 to the upside. Everything is green, strong momentum to the upside for next week. Treasuries are kind of mixed, pretty much to the downside, of course, with the additional interest rate hikes, 2 additional interest rate hikes before the end of the year. Treasuries will still continue to be pressured to the downside. No significant commitment of traders stacked on one side here, so standard trend trading applied. Same with the 5-year and the 10-year. And now we have 10-year an overall pinch, and this is super pinch. So this could go up or down. We don't know, but this signifies a lot of energy building here for a long period of time over these days, and we'll see where it pops. All right, moving down to futures. Starting off with the euro. And what I have flagged here off to the left here is red or potential shorts for those commitment of traders that are crowded long. And we have no significant FTM signal yet to the downside for both the candle and the FTM to signify a short entry. So we're just waiting to see whether or not, for the euro, whether or not we'll enter in where the market goes down on positive news. We are crowded out for institutional retail traders at 74% and 67%. We do have a downward target. That indication happens of 1.06. So we're waiting for the rocket ship to start to peter out on fuel, and then once it starts its downward movement with the candle and the FTM in alignment, along with, it'd be nice to have some Wyckoff volume in support. It is now below the dragon, so we'll just see when that downward pressure starts to hit. Mexican peso, one of the highest long committed traders that I've seen yet in a currency. It's at 85% long on institutional traders and 63% for retail traders. We do have a profit target of 6 cents, so to the downs, and so we need that entry overall. We did have an entry here with FTM and alignment. We were stopped out. It was below the dragon, and no further entry right here as it considers potential drop to the downside. It's a significant crowding out, so keep our eyes on that one. Dollar, as of Friday on the 30th, went ahead and hit both red candle and FTM signal to the downside with significant crowding out to the long side. So this would be an entry for dollar to the short side. We're all futures for next week. I think it opens up on Monday, so we got 77% on the dollar and institutional and 67% on the retail. Gold, we have a significant surge to the upside, both the candle and the FTM here, signifying a potential exit for any of you folks that are short gold. If you got in on the 20th of June, this would be now a good time to tighten up stops or get out at this point and wait for the next downward pressure to re-enter the market on the short for the crowding out. But this could be a turn here. We'll see if that continues to show strength in the overall thing. It did hit the Z3 excursion and Z3 and did a significant bounce, but for Monday or Wednesday could see a jump up here. Soybeans also hit its actual bottom. You can move the stop down to the top of the Heikin-Ashi. It also had an FTM signal with negative volume, so this could continue to go down, but tighten up that stop from this overall short entry here on the 21st. As you can see that we had 79% institutional traders and 62% retails for this nice entry right here for a beautiful squeeze for all of sugar futures. So move those stops down to here, or go ahead and consider getting out and entering back in at a later time. Gasoline is also crowded out at 70% and 62%, which the overall threshold for our entry was on the 20th of June. We followed the Heikin-Ashi down, but had profit here and no further trade the rest of the week. So it would have gotten out on the 26th. Soybean meal, we're looking at a short, which is crowded out long at 85% and 60%. Did have initial entry here with a small loss, and then it went ahead and spiked up, but we do have a pinch here, so we'll see what happens with soybean meal. Japanese yen is starting to be crowded out short on the short side. I'm looking for potential longs, and we haven't got that yet. Continuing to rocket down to the Z3 here. This could be a potential entry bounce here once it hits the Z3 and Z3 excursion. So look for a potential buy entry here with the candle and the FTM in alignment. South African Rand crowded out at 81% and 62% at the short side for institutional retail traders, and we're looking at a potential long entry. And even here, everything's below the dragon, so it's continuing to go short. So we're waiting for a green candle up with a green FTM, and we haven't had that in many days. So waiting for that. What we did here is have an overall squeeze here until this candle here, and then it started to go down and continuing to have, and the institutional retail short the overall market to one side. So look for an FTM and a green candle to go in the opposite direction for that turn. Palladium crowded out on the short side at 77%, 58%. We do have a target of 1,137 point. And we're currently at the Z3 excursion, looking for a potential bounce and an FTM in alignment to get in on the turn. We'll see what happens. Now these ones that I've highlighted in pink, I wanted to look at in terms of overall picks from Jason Shapiro. Now what I've seen here is that Jason was in the British pound. He mentioned on a previous video, or recent video, that he got in shorting the British pound. Now, the percentages are not at our threshold in terms of 70% on institutional trades, but it is high on the retail side, above 62%. So what I think he did was he went ahead and entered here overall to find out those squeeze. Now I'm going to go ahead and monitor retails with high percentages to either long or short to find out if that squeeze is significant along with institutional traders. If it is, then we can have a new threshold here for institutional retail traders to get in on these turns. Same with platinum. Platinum 75% on the retail and 61% on the institutional. Initial trade is here and the squeeze is on. This thing has been going on downward pressure terror, squeezing out these institutional retail traders that are continuing to go long platinum, which is forcing this entire market to go down. That I would consider a falling knife. So folks that are crowded out here are going to keep feeding this downward pressure on platinum. Silver also above 60% and had its initial on the long side, 64% retail and 63% institutional. Had its initial crowded out short entry here and continued with another entry here and still continued to the downside, which is interesting here as far as the overall pressure to the downside. Nice mark here with a break-even trade and then another one with a nice gain here overall to the downside. Overall target is $20.43. All the rest are not crowded out or any significant crowding out on the futures market, so standard trend trading applies. Well, folks, that's all I have for the futures week in review. We're currently conducting a Forex stock and futures course. If you're interested, click on the links below. And in the operations course, we also program in both Python and PineScript. So click on those links if you're interested. I hope you have a great 4th of July week and all the best for you and your trading. Well, if you like this video, go ahead and hit the like rumble button below and the subscribe button. And if you want more information, go ahead and click the course information links below. On the TradingView link and on TC2000, I have an affiliate link. If you open up a TC2000 account, you will receive a $25 discount using that link. Thank you for your time.